Grain markets are split. Wheat's stuck in a rut while canola's on the rise. We'll dig into what's causing the split, then look at the weather, trade tensions, and currency swings that could jolt prices in the days ahead. I'm Johanna Bota, and with me today is StoneX's Senior Risk Management Consultant, Craig Turner. Welcome, Craig. Would you start by telling us more about your role at StoneX?
Yeah, absolutely. Thanks for having me on. I'm a grain and oilseeds broker here in the Chicago office, and work with a lot of farmers and also end users and traders. Anything from corn, soybeans, and wheat here in the United States, but also spring wheat and canola in Canada.
Now, you also have a podcast, right? And on last Friday's one, you shared your views on wheat, corn, soybeans, and canola. So let's start with the soft commodity you are more bearish about, wheat. So US wheat doesn't get any export demand. Why is that?
Yeah, so it's the high priced. It really is the highest priced wheat there on the export market. When it comes to wheat, the United States is known as the world's residual supplier of wheat. And the thing is, the United States currency, it's strong. Land values are high, labor costs are high here. And when you compare that then to, let's say, Canadian wheat or in European wheat or Black Sea, Russian wheat, or even the Southern Hemisphere, Argentina and Australia, and those really are the major exporters. United States is just almost always the highest price. So um, it's just it so unless the rest of the world, meaning the major exporters, have a shortage of wheat, we just do not get a whole lot of demand coming back to the United States.
What about corn prices, which, by the way, look boxed in for now? But a spell of bad weather could shake things up, no?
Yeah, it certainly could, but the thing is usually with weather rallies in corn, it'll be in April and May. By June, if we haven't had reason to believe of lower acres or if good to excellent ratings aren't coming down or if the forecasts don't look threatening, it's hard for the funds and the money flow to come in, to buy grain. Now, old crop corn is tight, but if you are a buyer of corn here and you can start seeing corn, let's say from Texas, starting to be harvested in August, and you don't need it in the next 6 to 7 weeks, then there's no real reason for old crop to get going. On the new crop side, a 1.8 billion carryout or change seems fine, but there's also this thought that the Brazil crop that was harvested is getting bigger. And also, too, I'd just like to remind everyone, it's very hard for the funds and professional money managers to be buying corn or soybeans or some kind of commodity when this trade war or this tariff war is hanging over everyone's heads. I mean, everyone has to defend their positions when you're on the spec side talking about those kind of sizes, right? And if you're in the conference room with all the other traders and they're saying, "Hey, why are you long corn? There's or soybeans, there's a trade war with China going on." It's a tough one to defend there.
Yeah. Well, you actually just mentioned soybeans as well, and I wanted to ask, do you also believe that soybean prices are also range bound? And are the reasons the same or are there different ones?
I think so. Soybeans can What's interesting about soybeans is when we're at a 300 million carryout or 295, it's not tight, but it's not abundant either. You can call it a little bit snug. If we could get something going with China for demand in some kind of trade deal, it would actually go a long way in helping the soybean market rally. At 83 or 83.5 million acres, I wouldn't be surprised. There's the argument out there that soybean acres may be a little bit lower just because we had some late planting in southern Illinois, southern Indiana, like the bottom half of Ohio. You can also make the case that maybe not all the corn got planted down there and it either went prevent plant corn or it may went into soybeans. So I think we have a chance to rally in beans. I think it's a similar situation with corn. You need to see a concrete trade deal. I will say the one thing soybeans has over corn is the EPA and the EVO, basically renewable biofuels. We are expecting the that to be favorable for the industry, meaning that there will be a higher requirement or quota or guidelines for soybean oil use for renewable biodiesel. And if that's the case, then that does allow soybeans to maybe get a little bit of a giddy up and go. But still, we kind of see it'd be very difficult for beans to break out over $11 without a serious weather issue or China coming in and being a buyer again.
Okay. Well, let's talk about your favorite oilseed now, which is canola, and favorite as in you are most bullish on canola. Why is that?
Yeah, so there's 2 things going on with canola right now. One, the old crop is tight. We've had, you know, production was fine last year, but demand was a lot stronger than people realized. And then earlier in the marketing season, China said they were putting tariffs on canola, but it was basically canola oil and the meal or cake, but it wasn't the actual raw, canola seed. There was no, and what we've seen is there's been a very strong demand for that. Now, fast forward this year, we planted less acres of canola year over year in Canada, and that has a lot to do with rotation. Like, you can't plant canola on canola. Some guys, because prices were so good, we're doing it every other year, but you really need to do it like every third year, every fourth year to prevent a lot of disease up there, right? So you've got that going on, and then two, it's been dry in Western Canada. In the United States, the Midwest weather has been pretty good. If you do look up in the North Dakota, Montana region, that's been dry. You go right above that into Manitoba, Saskatchewan, and Alberta. That is the western prairies of Canada, and that's where all the spring wheat and canola is grown. And that's been dry. They've been forecast for rain and missing it. And honestly, we're probably going to be breaking out in that market if the weather doesn't improve, immediately.
So, what about compared to soybeans then? Why is the price a little higher?
Okay, so for canola, one, canola is a little bit of a higher quality. Uh, Oil seed than soybeans. On the dairy side, a lot of the dairy cows prefer the canola meal over soybean meal. Canola oil is a little bit higher quality than soybean oil. The other thing too is China's actually still buying canola, um, and we're getting tighter there. So there's a couple of different reasons. I think it's not so much canola is outrunning beans as much it is like it's the bean market. It's hard to get a rally when you just don't have that demand. So if we do get a rally in canola, which we are, soybeans is kind of is a follower. It's definitely a follower as a substitute, but it's not getting the full kick higher.
I see. Well, thank you, Craig, and thank you for watching. For more financial content like this, don't forget to like and subscribe to our channel.